key risk factors, obviously from an equity market participant, always keep an eye out for risks that can emerge. One is that geopolitically there is a considerable amount of tension, and that geopolitical tension does not seem to be coming off, and therefore keep an eye on that in terms of its impact from our market perspective. The second is the global interest rate cycle. As you know, in the beginning of the conversation, we were discussing on monetary policy as well. The market seemed to have factored in that Fed will start cutting rates, and then we saw Fed commentary, which kind of has resulted in market pushing out the Fed rate cut or the pivot of the Fed as such. So the monetary policy cycle is something that would have a bearing in terms of equity market and valuations across the world. And the third factor for us specifically is corporate earnings. So far, so good. In fact, even in this quarter, if you look at corporate earnings project at headline level, Nifty continues to deliver in line with expectations. And therefore, earnings growth for FY24 and 25 seem to be very intact as of now in terms of earnings expectations. So these are three key factors and risks that we would continue to watch out for. And finally, if I may just end by saying that a lot of the growth that we have seen so far has been driven by premiumization or at the top end in terms of demand, while mass consumption has been lagging. And therefore, how does mass consumption pick up and start tracking the growth that is at the top end would also have a bearing in terms of how markets pan out.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.